Hello, good evening, everyone, and thank you for joining us again in the episode 2 of Best Accounting Practices 2025, BAP 2025. Episode 1 was amazing, episode 1 was enlightening, episode 1 was, everything. For people that attended, they can testify to that. And since then till now, we've had over 600 viewers across our platform. So 600 people cannot be wrong. If you've not watched that episode 1, please do go back to our pages, go and watch the episode 1 of this event where Dr. explained extensively about cash flow management, about everything you need to know about cash flow management and your organization management in terms of cash flow. Okay, so today we are going to be having Sir Patrick. It's going to be taking us into more and more and more deeper into the best accounting practices for entrepreneurs, business owner, brand builders, or as far you in fact personally, as far you have a life to to stay accountable, you need this session. So if you are joining us live, thank you so much. Drop a comment for us to know that you are joining us, and we are going to be watching the replay. Thank you so much. Watch to the very end so that you don't miss out on all the value.
Hello.
Mr. Patrick, speak on. Oh, it seems network is doing some ojoro there.
Hello.
Yeah, go ahead,
Can you hear
please.
me?
Yes, we can. Go ahead, please.
Okay, thank you very much. I may have to turn my camera off.
Briefly, I'm sure the camera will be back on soon. Thank you very much, guys, for connecting to join us. Please confirm you can hear me.
Yes, I can hear you. Please go ahead.
Okay, thank you very much. So, this evening we are going to look out for basic accounting principles that small businesses will need to put their minds to if they want their business to expand. Last week, Doc took us through a number of areas, and today we are going to do a continuation of what we learned. Mine is going to be a bit snappy, and then Doc will also come in at some point in time on the areas that we'll talk about. So I'm going to talk about some reasons why accounting principles are non-negotiable for small businesses. I'm also going to talk about some foundational accounting principles that small businesses will need to put their minds to get to know. And then we'll also talk about some key principles that we need to follow. So let's start off. It's very interesting that according to research, about 80% of small businesses fail due to poor cash flow management. And this is a study that was done in the US among small businesses. 80% of small businesses actually do not see the light of day, or they fail because of poor cash flow management. And last week, Doc explained the types of key highlights that we need to focus on when it comes to cash flow management. And that's what set the context for our discussion this evening. So 80% are not able to manage their business well, and they actually collapse because they have challenges with their cash flow. Another thing that we need to also keep in mind is that having your books clean as a small business is a critical component if you want to secure loans or attract investors for your business to grow. Every investor that comes into your circle or wants to put their money into your business, what they are going to look out for is how clean your books are, how well drilled are your books are. An example may be, for example, if you want to go into a startup business, like venture capital, you need to be able to provide clean financials and even projections to show that indeed you are ready to make use of the money that will be provided to you by the venture capital institution. Again, another reason why you need to put your books in order is in relation to taxation. If you don't want to have issues with the authorities when it comes to your taxes, you need to put your books right, in order and in perspective, so that you don't attract issues relating to penalties and all of that. So you need to have accurate records and all of that. And then again, a more critical aspect of why you need to keep proper accounting records as a small business is for strategic decision making. You need real-time data to help you take some critical decisions quickly. And that's why you always need to keep your books clean. An example would be, let's say, if you want to be tracking your daily sales to know whether your sales have dropped a particular day or not. If you don't have your books rightly put together, how do you track to know that your sales for Monday was better than Sunday? So that is another reason why you need to keep your books very clean. Now, what are some of the accounting principles that as small business we need to keep in mind? The first principle that usually confuses a lot of people is cash and accrual accounting. And here I will try to take my time to break it for us to understand. Now, when you talk of cash basis or cash records, we are basically talking of recording transactions when money changes hands. And this is very good for small businesses. So you go to the market, someone comes to buy something, a person back gives you, let's say, thousand of any currency, naira, cedis, and you give the person, let's say, 200 as a change. You keep the 800. The 800 in accounting sense is your cash. However, for you to be able to record things well in accounting, we have what we call accrual basis. Accrual base. Now, accrual base basically refers to recording revenue or expenses when they are earned or incurred. And here we are not referring to cash. So I've done work for somebody. I issued an invoice to the person. The person is supposed to pay. My customer is supposed to pay, let's say, in 3 months' time. In accounting, we keep that expected amount as part of your accruals. And it's part of your income that you need to record. However, at the time that you are recording it in your books, that cash is not with you. And that goes to what Doc mentioned last week about cash flow management. You need to always ensure that your expected revenue in the future is able to match up with your current obligations at each point in time, so that you don't find yourself in cash flow challenges where you will not be able to meet your day-to-day operations as a business. And that's the part that Doc mentioned about liquidity, solvency, and all of that we learned last week. So that, again, is what you need to understand when it comes to some of these principles in accounts, which is the cash and the accrual basis. Then you also have what you call the matching principle. The matching principle. Again, as a small business, you need to be able to align your expenses with its related revenue. Now, this is very important. Let's listen. Now, every expense that you incur as a business, make sure the expense is tied to an expected revenue or a revenue that you are going to realize. Don't tie an expense to a revenue that has a different expense line. So let me give an example. If I buy a car as a small business, and the car is supposed to do supplies for me, go and supply some goods to customers, the supplies that the car is going to be engaged in, I need to buy fuel for the car. I need to pay the driver. However, the car is going to deliver goods that will give me revenue. I may have that as one line of my business. In the matching concept, what we are saying is that expenses like fuel, paying your driver, should be tied to the expected income that you are going to get from the supplies of the item that you are sending. Don't go and match apples with yam. In accounting, if you begin to match apples with yam, you will not be able to do proper record keeping. You'll not be able to balance your books well. So it's very important to make sure you always understand this matching concept and you follow after it. Then there's something we call consistency as a principle in accounting. Consistency here, we are referring to that if you are going to apply accounting methods, make sure you apply accounting methods over a period of time, which will be the same period of time. Don't use one principle for a particular year and use another principle for another year. It does not help you to be able to know exactly how the business is performing. It does not help you to track, to know the performance of the business, and even to make projections into the future. So make sure any accounting method that you use for your balance sheet, for your profit and loss, all those things, income statement, make sure you are matching them accordingly. Now, in setting up an accounting system, there are certain key principles that we need to keep in mind as businesses. And I've called or termed it efficient accounting systems. The first step you need to do is that you need to choose the right tools for your accounting system. There are a number of tools that you can use for your accounting system. Some are free, some are paid. But as a business, I always advise that you invest your money into accounting tools, because the more you invest the money, the more you get higher and greater functions to help you. So for some of the tools, you may have some that are low cost. For example, we have a tool called Wave. We have a tool called Zoho Books. These are all books, software that you can buy. We have QuickBooks that you can get online. These are all things that you can use to record transactions relating to your business. We have one like Zero or NetSuite, and that's very good for startups that are usually into complex operations. These are tools that you need to be able to invest to streamline your operations as a small business. You have to move away from manual recording of data, manual accounting that you do in this modern day, because these tools are going to help you to take quick decisions. You'll be able to project well and take quick accounting decisions relating to your purchases, relating to whether the business is performing or not. So that, again, is very important. So the first thing is that make sure you choose the right tools. The second thing is that you have to structure your chart of accounts. Chart of accounts. Here, what I'm referring to is that you have to categorize your accounts according to your business model. An example is, let's say, if you are business into e-commerce, when you are recording your accounts, make sure you keep things relating to, for example, cost of goods sold, shipping costs, returns as one chart of account. If you are into, for example, consulting, yours is a service that you are offering, consulting, then issues relating to, let's say, your billable hours that you are going to charge your clients, your software subscription that you are going to use, all of these things should be structured as a chart of account that you have for the business. So it should be well structured as a separate chart of account. Then the third one is that you need to learn how to automate as a business owner. Automate here means that you are trying to put a system where the system will take charge of certain operational and continuous assignment. So, for example, if you come to your bank feed, here we are referring to synchronizing your transactions automatically. So, if you have a QuickBook, for example, as a software, once someone buys something or you sell something or you key in anything, automatically and instantly it's reflected. That helps you to keep real-time records of your business. Some of them can even be linked to your bank account, so that once it records, it goes straight into your bank account details, and you'll be able to take that records to take quick investment, strategic, operational decisions as a small business. So that defeat the idea of going to manual where you need to keep things manually. You have to move away from that. So your bank records, you can automate them. Then your receipt scanning. You don't need to keep your receipt hard copy nowadays. Yes, hard copy may be good for record keeping, but you can scan all these records into your software, and that will be able to be kept there for a longer period. Issues relating to in Africa, we know issues relating to flood. These are things that happen very often. Fire in marketplaces. When these things happen, you are likely to lose all your records, and that's why you need to get into automating some of this by scanning your receipt into the system. So there are softwares like Dex, Expensify, that can help you to digitize your receipt. So you can even do it online. So you print the online receipt for the client and you keep a copy in your system. That again is a very good one. Then invoicing again is one that you need to consider. So you don't need to keep your invoices manually. Nowadays there are softwares that can help you to do e-invoices, like a typical software that you can use for your e-invoices is one that we call FreshBooks. FreshBooks. So you can just go to the Play Store and download FreshBooks, and you can use that for your invoicing when it comes to automating your services. After you have done that, one key thing that you also need to know as a principle is bookkeeping. And here I'm talking of best practices when it comes to bookkeeping. Now, in bookkeeping, there are some do's and don'ts. As the name suggests, bookkeeping basically means that keeping records of your transactions. Now, what are some of the do's that you need to consider as a small business when it comes to bookkeeping? One, make sure you reconcile your records monthly at most. At most, every month, do reconciliation of your records so that you'll be able to spot errors very early in the day. And errors here, we are talking of duplicate transactions, omissions, and all of that. Make sure you do your reconciliation monthly. Two, separate your business from your personal finance when it comes to bookkeeping. You may be running an enterprise. If care is not taken, you end up mixing your personal income together with the business income. And that also goes with joining your personal expenses to your business expenses. When that happens, how do you track whether the business is doing well or not? How do you track leakages? How do you track whether you are using the money for something that may not be business related? So separate personal from business finances. So you can use dedicated bank accounts for your personal, dedicated bank accounts for your business. If you are using debit cards, make sure you have separate debit cards for your business and then your personal account. So that's another do that you need to do. Then track your receivables and payables. If people supply you goods that you need to pay, that becomes your payable. You need to be able to track to know when they are due. And that should be part of your record keeping, which is the bookkeeping you are talking about. So I've supplied goods to a client, and the client's supposed to pay me, let's say, in 3 weeks' time. Make sure you keep records to know when the 3 weeks is up. Reminders that you need to send to the clients, you need to send them. Because when the receivable delays and you have payables to sort out, it can affect your ability to honor the payables. So again, make sure you are tracking your payables and your receivables when it comes to your bookkeeping. Now, what are the things that you don't need to do, which we call the don'ts? Don't ignore small transactions. Don't ignore small transactions. Don't say that, oh, this is something small. This one, this amount, I don't need to record it. It's nothing. That amount that is nothing, that is small, is the same amount that will grow, and at some point in time, you'll not be able to spot it in your account. You'll not be able to track it. So every transaction that happens on your account or in your business, make sure you are keeping records in your books. Then don't procrastinate tax payments. So in record keeping, you find out that sometimes you have tax ahead of you that may seem very far. So you need to honor your tax obligation. Let's say 31st of the month. We are around 10th month, 10th day of the month. Instead of putting some funds together to be able to meet the obligation on 31st, if you are not careful, you wait and do that on the 29th, and that's when perhaps your cash flow position may not be good. And that can put you in a very tight corner. That can sometimes even lead to the tax authorities surcharging you, and that becomes an extra cost to your business. So again, don't procrastinate that. So that's about bookkeeping best practices, do's and don'ts. Again, as a business owner, you need to invest knowledge into understanding your financial statements. We all know that when it comes to financial statements, we are basically looking at your income statement, which is your profit and loss. And the formula for profit and loss, for the simple understanding, is that you subtract your expenses from your revenue to get your net profit. For startup business and small business, you have to monitor what you call the burn rate. Burn rate here means that your monthly cash depletion. An example may be, let's say a tech startup business, you are into tech, and you spend about 20,000 monthly, with 20,000 that is geared towards your expenses, 15,000 geared towards your expenses. It means that you have 5,000 over the period of time. If you don't manage that 5,000 well, consistently, that 5,000 can begin to shrink, and that's what we call the burn rate. And once that shrinks, you realize that you begin to start making losses. So as a business, you need to spend some time. If you can't do it yourself, there are people that can help you to put your income statement together, invest money into it, get understanding of it. Even when it's prepared for you, sit them down to understand what each variable means for your business. So income statement is a critical component when it comes to your financial statement. And then we have what we call balance sheet. So balance sheet here, you are looking at your assets and your liabilities. Assets are things that are generating revenue for you, and liabilities are obligations that you need to sort out. And we have what we call equities. Equities are basically the shareholders' fund in the business, or what the shareholders have committed into the business. Now, you need to understand all these components, the current assets, the current liabilities, what each of them mean for your business, and how you can match them up to ensure that your business does not come to a standstill. Your business is not suffering from solvency. Your business is not suffering from liquidity. So again, invest some time in that. And it's part of the training that we are going to offer very soon. So make sure you spend some time, attend the training to understand balance sheet management. Because working capital, which you all know as current assets minus liabilities, will have a negative impact on your liquidity. So if you don't pay attention to your stocks that are over bloated, because you are recording them as part of your assets, it looks good, but the stocks are not moving. At the same time, you have some creditors that you need to sort out. These creditors are on you, but you have the stock over there. It is through the balance sheet management that you'll be able to spot out these inconsistencies and errors that you need to be able to match up. The third aspect of the financial statement that you need to put your mind to is what Doc talked about last week, which is the cash flow management. So he mentioned operating as activities, which is more like the day-to-day business cash flow. He mentioned investing activities, which is more of the equipment purchases, asset sales, and all of that. Then he mentioned the financing activities. So if you want to go for loan, you want to get some equity investment, all of these things goes into the cash flow statement that you need to understand the linkages and the impact of one side on the other. And again, that is very, very critical. As he mentioned last week, one of the red flags that you will have to spot in cash flow management is that You can be profitable, but you'll be operating negatively when it comes to your cash flow. And again, that can be due to some unpaid invoices. And that is something that we need to keep our minds to as businesses. Now, what are some of the common pitfalls and how to avoid them when it comes to accounting principles for small businesses? The first pitfall that you can find yourself in if you don't take care is that you run your business without emergency fund. So every money that comes into the business, you are pushing the money back into the business. You are always buying things, and you are not keeping a buffer that can be able to meet up your operating cash between 3 to 6 months. That can be dangerous. Make sure you keep a buffer as a small business, which will be from the profit that you are making. Keep some that you'll be able to be set aside as a safeguard. And my advice is that at least that should be able to cover about 3 to 6 months of your operating cash. And that becomes a very good emergency fund. Then 2, you should not ignore certain KPIs or key performance indicators as a business owner. So for example, if you look at your gross margin, you should make sure that you keep it very healthy. That is one of the things that you need to keep your minds to when it comes to that. Again, like customer acquisition cost. How much money do you spend in getting a customer, and what is the value that you are getting from the customer over a period of time? So if you invest, let's say, 1,000 to get one customer, what is the value you are getting from that customer? Again, you should be able to set out the metrics to track that. Then the third pitfall that you should not fall in is that sometimes as business owners, we think that we can do everything. So I'm a business owner, I'm the accountant, I'm the sales manager, I'm everything. Unfortunately, when it comes to accounting principles, sometimes if you do all those things by yourself, some of the things will slip through that you not see. So it's important that even if you can't afford a full-time accountant, make sure you get a part-time bookkeeper to be able to put your books in order for you, so that you pay the person something little to keep your books running and in order. Because if you try to do it yourself, things will slip through that you will not see. It's very, very important. An example, perhaps, is that let's say you run a bakery, and the bakery can fail because you are not able to track the food cost percentage over the period of time. And as time goes on, the business owner may not realize that there are food wastages over the period of time, and that can eventually lead you to go into what? Bankruptcy. So it's important that you get the services of a part-time bookkeeper, someone who has a little understanding of accounting, to help you to track your books. It can be monthly, it can be quarterly, but make sure it is being done religiously. As I wrap up my session for Doc to add a few things, when it comes to your actions that you need to take, you need to start today by opening a bank account if you don't have it as a business owner. You can't run your business on the table. You can't run the business under your pillow. Make sure you have a bank account to track your expenses, to track your income, to track your cash flow. That, as I said from the beginning, can help you to get loan support in future if you need loan support. If an investor wants to see your books, one of the things that they will ask for is your bank statement. So make sure you have a bank account for your business. 2, make sure you track your cash flow weekly. Make sure you track your cash flow weekly. And as I said, automate a number of the actions that you take in your business. Invoicing, make sure you automate it. Receipting, make sure you automate it with apps that nowadays are very common for you to be able to use them. Make sure you do that. And that can help you to reduce manual errors that comes with a business. Then the final thing I want to say is that, as I said earlier on, make sure you get an expert to help you in your bookkeeping periodically. And that can serve as a check and a second eye for your business, so that nothing slips through in your business. Sorry. On that note, I want to pause and invite Doc in to add up to a few things that he wants to touch up around the topic of best accounting principles that small business need to know. Thank you very much, and over to you, Doc.
Thank you so very much, Patrick. That was very, very comprehensive. Um, and you literally run through what the business owner need to know. Um, it is unfortunate that most of these things, as important as they are the things that many, especially small business owners, they neglect these things. Even when you advise them, oh, where is the money to hire a consultant? I've often said it that okay, consultants are in categories. So we are not asking you to go and hire the big fours. There are people, even young people who are, you know, still in school, in college, who can basically help you on part-time basis to keep your record. Because that's the fundamentals. So the basis of, like I also said last week, all these things we are talking about, if you don't keep your records, they are like they don't make sense. Yes, you can be a business for many years if you don't keep record. There is a business that's a way where people run business. They are at standstill for a long period of time. They just keep on running, doing one thing after the other. But the more okay, you set up a proper system in place to keep record. And I always advise that look, this thing doesn't have to be too sophisticated. It is not as difficult as people look at it, but make sure you are keeping that record. And I also like the fact that Patrick emphasized that look, we should avoid manual records. Manual recording is like maybe you are using your notebook, you sell one you this thing, you put it there, you bought 10 cartons or 10 pieces, or you put it there. Yes, that may be a starting point, but again, the world is moving, and now everybody has phone now. I mean, and there are a lot of things you can even do with your phone. There are some of this software you can put in your phone that you can put this thing, you know, your Excel or whatever. So you have app that can you can help this. It's easy for I mean, to download and or to also be able to retrieve. So keeping record cannot be emphasized. In fact, most of my videos on YouTube, I kept on saying this: keep good record, keep good record. And when you are going to keep good record, you have to understand most of these basic principles that Patrick was mentioning. For instance, the issue of having a separate bank account, from your business and personal bank account. It is an issue also that many small business owners are guilty of. Some don't even have a bank account. I've previous most of my consulting engagement. Some have said, look, they don't want to open bank account because they are going to be paying charges. The bank, the money in the bank, the money will be reducing. Even when I try to explain to them that okay, whatever you charges you make it because of the business. It's part of running the business. It's most of this they actually tax allowed. They're tax allowable. So but they don't know the advantage they need that okay to keep your money in the bank. And again, when you want to maybe you want to take loan, you want to take overdraft, they ask for your record, they ask for your bank they want to review your bank transaction, your bank statement. They ask you for your bank statement, and if the bank statement is reading your name, they will most people me lender will not agree to that. Okay, why is the one for the business? So whatever you bank charges you are incurring, know that it is part of cost of running the business. And when you are filing your tax, this is allowed. This will do the tax you pay at the end of the day. So many of this knowledge, are not known to small businesses. But as it is now, we to go further from here, we are planning to actually, organize a lot of webinar workshop, but paid workshop from this time around. I mean, going forward, where we can take time to, educate business owner in this kind of what they needed to do, what they need to do to make sure that their business run very well. So the joy of running a business should be that the business is not running you. I keep on. That's one of the phrases also I always always tell business owner, make sure that your business is not running you, are the one that is running your business. And there are steps, there are golden principles you have to maintain, which Patrick has, kindly, taken us through that. So these are the thing that businesses are expected to do to be able to not just to be profitable, but to continue to run for a long time. Because why starting a business and within a year or less than a year the business is gone, and you go back to the trenches again, and you start all over and all over again, and you become what you call a serial entrepreneur, and none of them is giving you rest of mind because you don't take cognizance of these issues. The issue we are discussed today, there are so many, there are so I mean, even in universities, these are things you cannot even finish in a semester. So what we are going to do afterward is to package some of this thing into webinar. I mean, to workshops whereby those who want to invest in their business can call us. Okay, I want to learn more about this things. Then we can take time to teach them more because we have the experience, we have the expertise to guide you to run your business, not just to be profitable, but to be sustainable. Uh, and of course, you cannot even know that your business is profitable if you don't keep record. Because it is easy when you are seeing money. That money you are seeing, you don't know which one belongs to you, which one belongs to the business. You just spend it. So it is very important to do this. Let me pause there and let the um, coordinator take charge from that in case there are people that have questions and all that. So, yeah.
Thank
Hi,
you
you're
so
over
much,
to.
Doctor.
Yeah.
Confirm if you can hear me, please.
Yes, I can. Go ahead.
All right, thank you so much, Doctor. Thank you so much, Mr. Patrick. I'm sure everybody has seen something. They've seen themselves in today's teaching. Everybody has seen one thing or the other to take back with them. All right, so if you have any question, please you can start dropping it. So as I wait for your questions to come in, I'll just like mention some very vital points that Sir Patrick mentioned that is very, very common. And I'm just saying this again to remind you. I talked about moving from the manual accounting system to the one you can use on your mobile, use on your phone, automate to the ones you can automate and not just you having to write on your book and on your book or paper. It even makes it easier. It makes record keeping faster. You can just with a click, everything is where they're supposed to be. With a click, invoice, receipt, all of those things are generated. Reminders are sent on automation. All of this to run without you even being there as far as you've set it up and you've arranged it properly. So why don't you try that out? So the next thing you talked about is ignoring small transactions. So I believe once you've have your system set up in terms of automating the system, nothing is going to be missing. So you don't ignore small transaction, you don't procrastinate tax payments. So at the end of the day, when they are filing stocks, you don't, how come my debt is this much? And that simple thing used to run some people out of business, because they compiled a lot of debt, their tax debt. Spoke about emergency fund. You see, some things happen and you hear the company just in a month they are unable to pay. They're unable to pay their staff. There are some organization right now that if they don't make sales that month, if they don't meet some particular sales number that month, salaries will not be paid. So what then happen when let's say economy is down, let's say sales then come in, that's just life. It happens and sometimes it goes south, sometimes it goes north. What happens when it goes, the other way around? You should have an emergency fund that you can fall back into. Then you talked about setting KPIs for your business. You spoke about quite a lot of things. So if you are joining just now, please you have to go back to the beginning of this video to listen to Mr. Patrick from the very beginning. In just that few moments, he has given a master class for you to build a business that will a business that can run well. I mean, in terms of best accounting practices for you to leverage for your business. And like Mr. Patrick and Doctor have mentioned about the workshop. So there is a workshop coming up. All of those things that have been explained in both episode one and episode two, there are a whole lot for you to just digest and start implementing. You need expertise such as Mr. Patrick himself to hold you by the end to teach you, take you from step one to step two to step three to step four, like the how of the whole process to guide you. So this workshop is going to be coming up, and for you not to miss information about this workshop again, you have to ensure that you are following both Doctor and Sir Patrick across their social media platforms, so you do not miss any of the updates on the workshop, because you attending this workshop is investing right in your business. You attending this workshop is you building foundation of sustainability for your business. And again, is an opportunity for you to have access to doctor, an opportunity for you to have access to Mr. Patrick, one-on-one conversation. In some cases, probably in the session of group coaching and all of that, you want to ensure that you key into this opportunity. So what you need to do right now is to ensure that you're following Dr. Bolu across all social media platforms. It's Facebook, LinkedIn, Instagram, YouTube. Then Sir Patrick on his TikTok account, his LinkedIn account, his YouTube account. Yeah, you should follow them all across social media. So while I wait for people to ask questions, there's a question from the community to Mr. Patrick. So this person said that there are some of the tools that are too complex to use, and those that are easier to use are too expensive. What do you do when your budget is not fitting into the price of the what do you do when your expense your budget is not fitting into the expensive one, and the free one is not easy to use in terms of automating your accounting system? Sir Patrick, that's for you.
Yes. Thank you very much. I think that luckily for us, we are in an age of information where if you don't really know about something, there are tools that can help you to know how to use them. So any of these tools that we have for automation of receipt, invoicing, any kind of record keeping that you do as a business. I mean, when you go to YouTube, for example, and you type in or you put in that particular tool on YouTube, you get a video or videos on how you can use this particular software. So I don't think that you will need to at all costs go and pay something very expensive because you think that the free ones are very complex. There are videos of people who are using it that can walk you through the process. Or beyond that, you can also go get in touch with myself, Doc, to help you with a particular software that you are referring to. But I don't think that you should struggle at all. Any app that you want to use for your automation, there are videos on that app on in terms of the practical side of it, how you can use it, the live usage on YouTube. So just go to YouTube, or you can even use any AI to walk it through, chat with the AI on how you can use that particular app, the challenges that you are facing, how to navigate. You can get enough information on the internet nowadays to be able to go to that. So I don't think that any app will be that complex that you won't get any support online to be able to know how to use the app for the automation service that you are looking at. That's my point of view. I don't know if Doug wants to add something to that.
Okay. Okay. So to the second question, this person said, currently my mm, currently the business is not making any sort of income. It's a new business. I'm just building the brand. How do I ensure that I'm keeping myself accountable? That's to you, Mr. Patrick.
Okay, thank you very much. So what we need to understand is that businesses run on cycles. Every business that you start has a cycle that you need to follow and understand. So the first cycle is that you are trying to put the brand or the product or the service in front of people. Once you put that out, you have to make some commitments, and those commitments may not immediately generate revenue because it's an investment that you are making. And that is the stage that usually you realize that you start the business and the business is making some losses, which is understandable. After a certain point in time, you need to have a plan that, okay, per my plan, I need to be able to generate enough sales at, let's say, the 11th month, the 12th month, or after 1 year to be able to now begin to break even and begin to now look at making profit. If you don't have the plan from the beginning, you are not going to be able to even make proper inroads. You wouldn't be able to know whether you are ahead of the curve, you are behind the curve, whatever sales you are making is one that will generate into break even or profit. So the plan must be there, and now you understand the cycle. And then when you see that the steps that you are putting are not yielding the required sales that will make you get into the profit level of break even, then you call for help, and that's where the help is important. Whatever business that you find yourself, you don't have an idea on it or you don't have enough information, someone knows it. So learn from those who know it, who are in the business space, to assist you in building yourself from there. So that can mean that you need to perhaps switch your focus from the kind of marketing you are doing to a different marketing. Perhaps you are focused on traditional marketing. It may not be working. You move to social media marketing, or you move to affiliate marketing, or so all these things are things that you need to explore as the business begins to grow and you are still making losses. At some point in time, you also realize that, okay, perhaps the target audience for your market or business is not right. So you need to switch your target audience. It may be an issue relating to pricing. You need to look at that. That's also a component of that. It may be an issue relating to location. That is also something that you need to focus on. So it's not a one fit all answer of yes and no. You need to do deep introspection into why the business is making losses, even though you have a plan that maybe at that point in time you should be making break even. That must be done thoroughly. And as you do that, you drill down, you'll be surprised that quickly you begin to know and spot out what may be causing that particular losses that you're making. It may even be the fact that the product or service that you're offering is not one that really sells. So you need to now diversify into other aspects. All these things must be factored in as you look at the situation comprehensively.
All right, thank you so much, sir. So as we round up, over to Doctor, how easy, what's the easiest platform that people watching right now likely they want to reach out to you? Probably they have a few questions. What's the fastest platform for them to reach out to you, and you know what they should expect from you and what they should
I
reach out to you for?
Thank you very much. I don't know what you mean by fastest. I mean, all the platform you mentioned, either LinkedIn, either YouTube, either on Facebook. I mean, you can reach me. You can reach out to me through any of them, or you reach out through my website, thevillageboy.com, which is village. Let me put it at the banner here so that you can see that. So any way you want to reach out to me, is the same thing. We are on internet supply way now, so it is easy for everybody to reach anybody anywhere. So yeah, so you can reach me throughout this website, thevillageboy.com, uh, through Facebook, through YouTube, through LinkedIn. Yeah. Then based on those two questions, let me also add one or two things to it. The first question about um, software being expensive or free, too complicated to use. Most of this today now is like what you do. We have subscription system. Most of the popular software, they have subscription system whereby you pay on monthly basis for usage, and all the other headache of security, storage, and everything. they're actually taken care of, and it helps you a lot, so that you are sharing the platform with others, or me service as a software or as a platform. So there are a lot of opportunities whereby you just subscribe, but depend on your usage, and you're able to quickly run with that. That on the first question. On the second question, like Mr. Patrick rightly said, business is in stages. It's like a child. I always compare a business with a child. You give birth to a child. You don't expect that child to start washing plates or start giving you a glass of water. Maybe the first, 1 year or 6 months, the child is sleeping for like 23 hours. So you have to nurture. The mother has to nurture the child. Then you get to a point the child is sitting down. Then to the point is crawling. Then they start walking and staggering, falling, and getting up. Then you get to a point that, especially in African home, you buy a stool for the child. The child stand on the stool to wash plates. It doesn't wash it very clean, but the time you ask the child to bring water in a plastic cup, because it can fall before getting to you. Then the time is okay. You ask the child to bring the glass cup first. Then you say, go and bring the bottle of water, because you can. If you ask the child to bring the two together, there could be accident on the way. So I mean, and you get to a point that, okay, you can call your child is growing now. You can even give a call. Hey, can you prepare dinner for me? So all these are in stages, and business is like that. When you are starting business, it's good to do your business at this stage, this developmental stage. Your business you are starting today uh, may not be able to feed you immediately. So that is why somebody said, we always advise you want to go into business, you have a reserve, maybe for 6 years or 6 months, 9 months, depending on the nature of the business. There are some business you can start that within the 1 or 2 months you can start generating good income, but there are some business you have to nurture for like a year or two, and that is why even in taxation, there are times, in most economy, they allow you to. I mean, they expect that your business could make losses in the first 2 3 years, so and you have opportunity to recoup that loss over a period of time. So those are the kind of basic things that people should understand, that it's not the day you start your business, this is your business become whatever you want to this thing. And again, if you want to learn more about business, I have 3 business books. You have the back end. This one is called Budgeting Made Simple, for techniques for busy business owner. You can get them. They are all on Amazon. This other one is Business Strategy Manual. There are a lot of techniques there. Then also Sustainable Cash Flow. There are templates. Even most of this thing we are talking about, that you can even put on Excel, and you can automate also and all that. So when you are, I mean, get consultant too around you. Get consultant. I mean, if you are within our reach, you can talk to us. But if you are, I mean, within your locality, you want to deal with people within your locality, get consultant around you who understand business consultant, and they could help you. So sometimes you need people to lift your hand, so that you can get to your destination. So that's what I will say. Add to that. Thank you, Ayo.
Okay, back to you, Mr. Patrick. Which of the platform is the easiest to reach you at? Any other thing you want to say to them, and what should they reach out to you for? So, over to you, sir.
Thank you very much, and thank you very much to Doc for the addition. I mean, anytime I have the opportunity to be on the same stage or interact with Doc, Doc is a deep person when it comes to accounting and budgeting and all of that. So thank you very much, Doc, for the insight that you've shared. I think if you want to reach out to me, all the platforms that you can think of, LinkedIn is Patrick Baah Abakwa. TikTok is Patrick TVGH. YouTube is Patrick TVGH. Facebook is Patrick Baah Abakwa. Instagram is Patrick Baah Abakwa. So any of these platforms, once you drop a message, you can connect. I'm active on all the platforms I've mentioned. You can reach out to me and we can have a conversation. Um, Relating to your business, relating to your personal finance, relating to an investment decision that you want to take and you need some guidance. Any of these things, once you reach out, I'll be able to assist you, support you on the journey, whether you are based in Africa, outside Africa, whatever you are. The principles relating to financial management remain the same. So you can reach out, we can connect to discuss solutions that will create value for you and your family and people relating to your business. Thank you very much.
All right. Thank you so much, everyone, for sticking around with us till this moment. If you're watching the replay, thank you so much for watching. And if you're joining us live, thank you so much. I'm sure you've learned one or two things to help your business. Like I said earlier, the workshop is oncoming, it's upcoming. Oh my God. Okay, sorry about that. The workshop is upcoming, and you should follow all the social medias that have been mentioned so that you don't miss out on the update. Thank you so much once again, Doctor. Thank you so much once again, Mr. Patrick. And yeah, we'll see you in the next one. Before I say the final bye, I don't know if you still want to say one last thing before we go. Doctor, Mr. Patrick.
Well, take care of your business so that your business can take care of you.
Awesome, awesome. Take care of your business so that your business will take care of you. Mr. Patrick?
Um, let's just try and practice financial discipline by separating our business from our personal needs, and that will help our business to grow. Thank you.
Awesome, awesome. All right, everybody. Thank you so much. Have a good evening, good afternoon, good morning, wherever you're watching us from. Thank you.